Hello guys, glad to have you on board again today. We're going to talk about those opening gaps we do have today. It's absolutely not what I was expecting, but still it is not just that bad. Some scenarios are doing great. I mean, the euro dollar is reversing right now. GBP USD as well. AUDNZD has been confirming its weekly candle close, so it isn't that bad, but obviously it isn't all black or white kind of setup. It's always shaded gray. So we're going to assess the risk underlying the US scenarios, and I would say basically all the equity scenarios, because they're all in the same package. Either everyone is going to be proving me wrong, or everybody's going to prove me right in the forthcoming weeks and months. Still very hardly able to anticipate any kind of timing to those markets, because they basically price bad news as a good news. And we might have just the opposite showing up in the forthcoming weeks if we see the hard data just softening or seeing some potential good news here and there. It's not like I said. We're gonna cover up cryptos first. So cryptos, absolutely nothing to say. The only thing that changes is that we can see that Ethereum has been building a slightly higher high. I don't know if it's been the case in every exchanges or if it's just an exchange basis, but all we can tell is that, all right, these 4 points is probably at the 2 point. So consider it as an horizontal level, and therefore it's just changing the structure of this triangle to what we call a barrier triangle. So we might have 2 sets of waves to consolidate once again early that week, 4-hour chart time frame. So I suggest there are 2 sets of waves to terminate once again. Normally the 5th waves retrace close to the 1, 2, 3 points, and normally afterwards we should have the breakout. So don't go breakout right now, but normally after a 2 sets of wave consolidation, the next time we'll try breaking the $150 should be just going fine. Normally we should have the same breakup occurring on Bitcoin and other cryptocurrencies. So timing is going ahead. I think now we've got something to pay for. The question is it going to be euphoric regarding the stock market in the same time, or is this going to be pricing in the panic? Again, don't forget that we also have a dollar counterpart in here, so I think dollar might be the impacting things in here, and I think that's the dollar weaknesses that might be just putting cryptos at play. So we'll see about that later on when we're going to talk about the crypto, about the forex. Let's go straight to this actually. So the dollar is reversing exactly in the expected area. It's still not yet validated, so don't be too aggressive. But normally we've been reversing where I was expecting the price to do. If the dollar is heading bearish, we'll finally have a breakout setup. It's going to be 4-hour chart time frame, okay? Because remember, we always trade in the context. So what I would like to see is this: the price failing in here, all right? Getting back to context area, kind of pull backing a bit to catch up on the trend channel, and then back to context. And then back to context, accumulation, and bang, breakout. And whenever we'll have that breakout, we'll have a pretty decent and violent move to come out of the dollar, because once again, in here, when we break this down, it's instantly the double top structure is going to be reported to the downside. So it's a minimum target of 92 on the dollar. It is not the end of the world, once again, just a classic move on the forex, but a 5% move on the biggest market, not market cap, but the monetary aggregate. All right, it's the biggest monetary aggregate in the world in dollars. So if dollar is destroying 5% of its reliable values regarding other currencies, it might be done for 2 reasons. Either there is capital inflow or negative or interest rate differences, or it is just that we destroy value in dollar. And in that perspective, that will just absolutely fit what I need, which means in the forthcoming weeks and months, the US dollar destroyed, because the US dollar capitalization is slashed by Wall Street going down. I remind you once again, the S&P 500, which is not the entire monetary aggregate in the US, but mostly more than 85% of it is more than $27 trillion. And to be honest, if we just slash it by 40%, you can imagine how much billions and billions we're going to destroy, and therefore it means we're losing strength in the dollar significantly in the same time. So that's the scenario I'm pricing in, still saying that so far prices have done every fucking thing they could to prove me wrong. All right, I mean, the dollar has been moving flat instead of going down. That doesn't mean it's wrong. All I say, we can range for an extended period of time. All I care is for the next big swing move to be to the downside, just like it has been to the upside previously. All right. Regarding VIX, I still tend to believe that for the forthcoming 2 months, you need to be bullish on the VIX. Not necessarily that the most bullishness is going to be achieved this month, but probably by next month, and this month is just preparing the upward structure for this to play its game. But I suggest, even if the higher level of risk and higher level of reward potential is probably going to be by the next expiration, I still stand to that you never know about timing, and therefore I suggest you be in the VIX already, just in case something goes wrong and unexpected in between. All right, Euro bonds might be reversing. That's expected as well. I mean, if the euro area is exciting itself this morning, that's normal that we should see the yielding going down, because if you cannot have only the best case scenarios. I mean, if we're pricing in the risks on the bond market but not in the equity market, means two things: either the stock market will collapse, which means speculative bubble exploding, or the stock market will rise for that reason. That's possible. Once again, it can happen. Or it is just that the stock market is pulling back, technical pullback, that will push it to new lows, which is exactly what I think, meaning that no matter what you can tell, I mean, look at the DAX. If you think this is bullish, then oh my god, there is still a lot to do to restore some bullishness. We might be just pulling back to find some consolidative structure. Let's have a look at the DAX right here, right now. You'll see it most probably. We're just 76% retracement, and it pretty much looks like a consolidation structure facing this bearish impulse we had on the previous weeks and the previous week data numbers we had. So is the DAX about to be strongly bullish, or is this an exhaustion move? So the question is, I'll wait until tomorrow to actually answer this question, because it's pretty damn hard to figure out what this is about. All I can tell is that we've got a bullish gap, so it could be a wave 3, all right? So that's the big problem. If it is such thing, then I'm wrong, because in my opinion, this cannot be a wave 3, because in my personal opinion, this is a 2 sets of waves. All right, so let's take things straight. We can clearly see an ABC structure, and normally we should see some bearishness setting itself again if we want to go to lower lows in the euro area sections. So we need to fail in here to prove me right. All right. If we don't, which means I could be wrong, because I'm not reading the future. I'm just assessing what I think is the most probable and trading accordingly with a risk management. There is the second option. All right, 1, 2, 3, 4 overlapping, and then we could have a wave 5. And if that's the case, then I'll be probably wrong, which means the market will probably consolidate, but definitely not making new lows. If we have a set of 5 waves to the upside in here, that's not good for me. That means that we built the bottom in here and that this is terminated. All right, so making a new high in here, this is what it means. In a long-term perspective, it just fucks up my entire reading of the market, because the price structure will absolutely and confirm what I previously forecasted, that this market is instead going to build 5 sets of waves in the weekly and monthly scenarios, because we're heading toward recession trades. If I'm wrong, this is how the market will prove me wrong. All right, so I don't know. I cannot know. It is impossible to know. All I can tell is that normally, if we expect more bearishness in the equities, and the inverted yield curve kind of suggests, even the bond traders right now don't even believe in this thing to recover. So if we're going on a new low, we have to fail in here in the euro area. We have to fail in here as well in the US, even though there is still a slightly bit more room available. anything that goes to historical high in the US just invalidates entirely my scenario, and I don't nearly think this is doable or going to happen. All I still tend to believe is that this market can try to rise for another set of days, can try to go higher, but there is a break up to do in here, which means it is not, we need something to do it. So is it going to be the Chinese deal? Maybe, but is it really something that you can set yourself euphoric about? I don't nearly think it is. The problem is, can you take that as a risk management or not? I can't, and that's the big problem. I'm so ashamed I got myself in this problem. I should have taken more profit in here to be able to handle that risk. I can't, and the market is fucking me up once again. I'm down the corner, and I'm gonna have to take a loss in the US if breaking up is what we're about to do. All right, so I'm ready to do it because I knew it could happen. And if we go there, I'm going to have to take some loss. Yeah, I'm going to sell again later, once again. It doesn't mean I'm surrendering. All it means is I've gone too far in my risk management. I can't do that. I'll take my loss and basically sell again when I'll have new informations. But I'm not going to be able to handle holding this thing up. Because if, for some reasons, and I still tend to believe that this is what could happen to just fuck me, is that you've seen that the US administration is deeply manipulating the market. They understood that the news flow is impacting prices, and if you put the news flow at an appropriate timing, perfect timing, you can somehow manipulate the market's behavior. So they really figured it out. They proved us several number of times in the past in which they've been releasing news at a precise timing to force the market breaking through decent levels. So obviously for the stock market, breaking through the 2870 would bring some euphoric into short-term prices, and that's definitely the kind of stuff that Wall Street would like and that the White House definitely would like as well. So are they just holding up the deal to get us to get below that level and just put a news like the deal is in good shape, in good motion to be released by next week, for example? If they give us a timing, it's definitely euphoric again for Wall Street. So maybe that's what at play. And if that works, I mean, if they're saying something and the prices are paying for it, I'm just going to have to get the fuck out. I'll just get in later on with new informations. But for now, I need to be cautiously trading because what I have in here doesn't nearly fit my plan. I was expecting the end of that week to be showing some signs of early bearishness to get ahead of this week. Instead of this, we're gapping up on top of previous week's high, which is definitely not what I'd like to see. I mean, we shouldn't be doing anything close to this, gapping up and breaking the previous week's high. So all I want now is for us to return and pretty fucking rapidly below the Fed's level, which is 28.45. We need to go down this. We need to close in here today, and if we do, we need to bearish engulfing by tomorrow. So that's what I need to stand as a bear. Otherwise, I'm going to have to risk manage, because if we hold a candle close on top of this level today, it means we've got high probability to just try fuck up that low volume area and reaching out to 28.85. And there, I'm not going to handle this. I cannot take that as a loss, which means I'll have to get out and eventually get back in later, but I'm not going to trade this area without confirmations. All right, if we do have a look at other markets, and probably Chinese markets, so what's been driving the euphoric today is definitely the not so bad number we had coming from China, but you need to put that in some kind of relativity. In here, it's just a PMI that goes up to 50.5, if my memory is right, after 3 consecutive months of being below 50, which we call early recession signals normally. So it means we've gone a quarter in contraction from PMIs in China, and we might just get the hell out of here. So first of all, it is just one number, so what we need is to confirm this by next month. And secondly, how mature is this move up to your believing? So out of the current lows, we've already risen 30%. We've done the best ever quarter everywhere in history, not best quarter in China, but to be honest, this is about it. All right, last quarter was so huge and so great that we had to price it up to the top. So it basically has been starting at the lows, opening at the high in a quarterly basis. What does that actually mean? we're trading here at below resistance level. So if we're building a top in here, same thing as always, all right? Just reverse that and tell me what you think. If you have a bias, then this is what you do. I mean, what would you do in that context as a bull? You would just buy that shit out. You wouldn't even think about it. So let's be honest, all right? What do you do in such context? You buy that shit. So why would you just buy equities right now? It means you want to sell them, either in China, everywhere. I mean, just this kind of stuff, I'm sorry guys, but this is not the kind of stuff that people generally tend to sell. All right, no one will sell in here, people would just be buying that. But instead, as you just reverse and have that freaking ugly bias that Wall Street has right now, that everything is going to be fine, that we're going to go historical high, that we don't have to fear the bears, but just try to fuck their stop loss as fast as we can. That's the motive, all right? That's the motive. That's what price suggests when you see them with a bias, with a perspective. You push yourself ahead of the prices making new highs, and therefore you say, we're not that far, so it's easy to get there. Is it? No, first of all, it isn't easy because the macroeconomic isn't nearly following those moves. It isn't easy because we now have an inverted yield curve, which suggests we're hardly going to make new historical highs with this, but with a speculative bubble. We've got lots of valuations in great dangers, like Apple's, who might be suffering quite some sellings in the weeks to come, Boeing that is still crashing, Microsoft and Visa. Just if they reverse, I'll get my my trading activated. All right, it's just the exact same thing in here. I mean, just have a look at this. All right, just put it in a goddamn perspective. Would you buy that? I would definitely do it. I would, without a single question. I will buy that. No questions asked. I need this to confirm by next week. All right? All I want is the goddamn weekly engulfing structure, which we failed to do last week. All right? So if we just do it this week, which means Microsoft, one of the giga cap, can take a minus 30% just like that, without even asking a question. In here, it didn't work out. We can go a little bit lower. All right, so Visa, don't take this one in the portfolio right now, but whenever it validates, minus 30% to be expected as well. So once again, all those big caps have a lot to lose because this is not pricing in. This is stupid end of trend exhaustion. All right. So wait for this, be patient, but this is not going to end well. This is not pricing. Just look at the boxes in a weekly basis. When we're going to get after this, we're going to have to reprice all that shit. All of this has to be repriced. So Visa, I can tell you where it's going to be bought. Probably in here and no more, no less. All right? 30 fucking bucks. All right? That's where I'm ready to price in again, or eventually just a bit in here when there is some price. In here you can see there is a logic. We can see boxes folding each other again. So these are the areas in which Visa meant something in terms of pricing. Just the rest is pure bullshit. So going in here, minus 60%. Oh, it's going to be painful for those who are buying right now. Now let's imagine the second one, minus 80%. Oh, you think it never happened in the past? Just have a look at General Electric and you'll see how it went, even if you were the #1 priority in the Dow Jones back then. So please, 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 once again, don't buy those shits or do it really short term. I can agree with that, but probably no more. Now just have a look at the candle close by today. I suggest you stay idle, as I will today, because I really don't know how to read this market. I'm waiting to get informations, reliable informations. Is this market showing some bullishness and I'll have to invalidate, or is this the bulls trying for the last time before surrendering and getting to new lows? But we're definitely trading a very complex area. It is not about time for beginners to get themselves in here. It is not about time for you to try trading aggressively, more likely being cautious. And just like I said, I mean, if I'm wrong, I'm way too aggressive to the current market conditions. So I'll have to lower my leverage, and that means take a loss in the US sectors and probably all other equities. So if this has to happen, I'll tell you how much I lose. Because I'm not the kind of guy who's going to hide this. It's probably going to be a significant loss. Even taking partial loss, probably going to take a 10% off the capital in the next forthcoming hours. But first of all, I want to see today's session priced in, and not just the Euro session, which is just nothing in terms of volume. All right, so watch out for this. I'll keep you guys updated. For now, I suggest you just put your hands as far as you can from the mouse. Avoid clicking, avoid taking any trade. This is a very dangerous area, and we need the price to validate some structures first before getting any further. Let me have a quick look. Is there anything else I'd like to tell you about? I suggest you remain cautious on gold as well. I hesitated to just buy it. But I would suggest this is what Wall Street want you to believe, that we've been rapidly pullbacking, so you can't buy that. You're not buying that kind of market. I don't know. I mean, maybe buying it a little bit lower pricing, but I would say we're probably just going to be able to triangle in here. So it feels like an ABC, ABC, ABC to do as well. So I'm just waiting for this to finish. A clearer mindset, but I kind of feel like it is the thing I needed to. I could just buy, but I'm already selling the dollar, and I think just as the euro dollar and everything, that I think the problem is about dollar. So I think dollar is really the topic for the week to come. I think dollar will just fall like shit. All right, that's what I would like to see. The market in here making a bearish engulfing structure for the week in the dollar, which means we open at the high. I want us to close down the lows in here below 96.25. If we do this, that's the scenario I'd like to see from the week to come. So I'm strongly exposed to dollar right now as I'm trending. I took my reinforcements on euro dollar. I still haven't on the GBP, but I may do as well. If this goes up, I'm probably going to take nice gains in here, but it will probably pay for my. It won't probably pay for my losses in the equities. So if equities are surging to the upside as the dollar goes down, it's possible. Once again, it's absolutely not logical, but it's possible. If it happens, I mean, hopefully the gains I could make in the forex will pay for half the losses I'll take in the US. But anyway, it will probably be a loss in the US if they keep going up. I can't hold this for longer than that. All right, we're trading the area. If they do make new monthly highs, which I don't nearly think is doable, if we do this, I'm not going to be able to handle this, which means we're going to be trading there for the next months as well, which means we're going to gain some time and trading in this area for a longer period of time. I'll just get out to get in with more information later. All right, so waiting for that goddamn shit to give me reliable information, which so far I don't. I mean, the market in here wants to buy. It's still holding this gap, and it's hard. I can hardly say if this is an bullish trend gap or if this is just a stupid usual range gap, which is basically just going in there, gonna exhaust itself and be invalidated by tomorrow or the day right after. All right, so I need today's candle close and tomorrow's validation to make sure I need to get the hell out. I obviously have some partial stop losses in this area because if we go there, I'll have to get out. All right? Bye, guys. Trade safe. Or moreover, I suggest you just don't trade today.